Gold prices have broken through $3,000 an ounce as investors seek cover from Donald Trump's tariff policies. It's traditionally considered as a hedge against geopolitical stability, and gold has risen more than 14% this year so far. And we look at since when Donald Trump has taken office in January, gold has hit a record 14 times as trade tensions boost safe haven demand. Well, for more, I'm joined by Jordan Eliseo, the Managing Director or General Manager at ABC Bullion Australia.
Hi, Alicia. How are you?
Thank you. I just mentioned Trump's tariffs. Is that why the gold price is so high?
Look, it's definitely one of the key factors. Obviously, the sort of on-again, off-again nature of the tariffs and some of the ones that have actually come into play have created a lot of volatility in equity markets in particular. So, if you look at the S&P 500, it's down several percentage points for the year. We've seen other risk assets like cryptocurrencies sell off as well. So those have been, a very significant contributor to the uptick in bullion, both prices and uptick in bullion demand. We're also seeing interest rates come down. And we're seeing a little bit of uncertainty regarding the inflation outlook. Inflation is not as bad as it was a couple of years ago, but it's still closer to that 3% mark in the United States, which is a problematic level. So all of those factors are contributing to the rise in gold and silver prices and in demand for gold and silver as well.
And what's the relationship with cryptocurrencies? I mean, is gold attracting Bitcoin investors given the geopolitical uncertainty?
I don't think it's the crossover is as big as many would claim. Obviously, Bitcoin enthusiasts tend to try and market Bitcoin as a form of digital gold. But the reality is that it doesn't really share any of gold's characteristics, not just that it isn't a physical item, but more importantly in the way that it behaves within a portfolio. And indeed, what we've seen this year demonstrates that again. We've seen the equity market fall rather than protecting wealth, which is what gold has done. Bitcoin has actually fallen by even more than the stock market. It also doesn't have the track record as a hedge against inflation that gold does. And it's worth remembering that in terms of its market size and the infrastructure surrounding it, the Bitcoin market is really tiny, whereas gold is a multi-trillion-dollar asset class that has hundreds of billions of dollars in daily trade. So it's sort of like comparing a speedboat to a super tanker. So not as much crossover as many would argue.
Now, we talk a lot about gold being a safe haven asset. Why is it considered such?
Well, I think you only have to look at its history. In environments like the one we're living through now, where there's a little bit more volatility in the share market, there is fears over the geopolitical outlook, which sadly remains very fragile. In those environments, gold tends to be, or has historically been, one of the best performing assets. And periods of high inflation as well, gold prices tend to rise by more than 15% per annum, or at least have in the past. And that's why it has this hard and I would say well-earned reputation as a safe haven asset that investors can trust.
Not that you're biased or anything, but what's the outlook? Can it keep running?
Look, if you look at some of the banks that are into shorter term forecasts, there are quite a few now that are predicting the gold price will reach somewhere between 3,200 and 3,500. That's US dollars per ounce by the end of this year. So that's around a 16% increase from current levels, if that were to transpire. Obviously, it's already had a relatively significant start to the year and uptick, so a period of moderation wouldn't surprise. But if you look at the outlook, central banks continue to buy around 1,000 tonnes a year. The key consumer markets in China, India, other parts of Asia and the Middle East, they consume around 2,000 tonnes of gold every year. So once you factor in those key consumer markets and central banks, that already accounts for nearly all of the gold that is mined in any given year. So with investors also adding to their portfolios through bars and coins and people buying jewelry as well, I think the outlook remains very positive for bullion.